Let me give you a quick overview about how to file taxes with dependents. Okay, so the head of household filing status typically allows for a more generous tax situation to unmarried taxpayers who maintain a home for a qualifying person, such as a child or family relative. And the thing is that the child or other dependent must meet certain eligibility criteria, okay? And heads of household must pay more than half of the cost of keeping up a household and can be considered unmarried on the last day of the tax year. And they can provide for higher income limits for certain tax credits. So this is really important. And one thing I want to say here is that there are some stipulations actually for married taxpayers. So married taxpayers are not eligible to claim the head of household status. You must be single or in some stage of separation. According to the IRS, you are considered unmarried if you are single, legally separated by divorce, or have lived apart from your spouse for 6 months or more in the calendar year, okay? So it's really, really important. To qualify as a head of household, you must meet several requirements. Be unmarried, pay more than half of the cost by supporting your household, live with other qualifying family members for whom you provide support for more than half of the year. Some examples of qualifying family members include a dependent child, grandchild, brother, sister, grandparents, or anyone else you can claim as an exemption. So this person can be a friend, for example. Now, let me quickly say something about dependents. In order to file as head of household, you must provide for at least 50% of the care received by a dependent, okay? 50%. And it is wise to actually have supporting documentation to prove your claim should the IRS inquire for further information. So one thing I want to say here is that prior to filing as head of household, be sure to review the IRS guidelines carefully to avoid an audit or hard inquiry in the future, because they do audit people. While you may consider yourself the head of your household, your definition and the IRS definition may vary significantly. Most questions regarding the head of household filing status can be found online at irs.gov, or even better, you can call the Internal Revenue Service at 1-800-829-1040. 1-800-829-1040. So give them a call if you are really unclear about your status. Give them a call. I want to dig a little deeper here about what is the head of household filing status, because I really want to explain this. And by the way, welcome back to the channel. We're having a conversation today about how to file taxes with dependents. So the thing here is that head of household filing status typically allows parents or adults in general with qualifying dependents who provide over half of the cost of keeping up a home for a qualifying person to claim a higher standard deduction and be taxed at the lower tax rates than single taxpayers or those who are married filing separately. And so it's really important to understand that if you want to be considered as a head of household, you must file an individual return, be considered unmarried, not be claimed on someone else's tax return, and be able to be able to claim a qualifying dependent on your return. So the thing is, in the past, we have had clients who actually were filing head of household, they were head of household applications, only to find out that somebody else claimed them on the tax return. So be really, really careful here. So what are the advantages to filing as head of household? Well, the head of household filing status provides two primary benefits to you. More taxable income falling into lower tax brackets. That's number one. Number two, you have a higher standard deduction. Okay, so basically, if you file as head of household, your taxable income will typically be taxed at a lower rate than you would filing as single. You would actually pay if you were filing a return as single or as married filing separately. So for this year, for example, the 12% tax rate applies to single filers with taxable income between 10 grand and 42 grand. Taxable income above this is taxed at 22%. Think about that, 22%. So if you qualify to file as head of household, you can have taxable income between $15,000 and $56,000 before moving out of the 12% tax bracket and into the 22% tax bracket. So there are significant differences there. Okay, for example, if your taxable income is $50,000, filing as head of household results in $910 less in federal income taxes compared to filing as single. So this is really good. And heads of household also receive a higher standard deduction than single or married filing separately taxpayers. The standard deduction for heads of household comes to about 20 grand this year. Single and married filing separately taxpayers are only entitled to about $13,000 in standard deduction. So big difference here. So the big question is, should you claim single or head of household? By the way, I want to quickly remind everybody about today's topic. We're having a conversation about how to file taxes with dependents. So if you're not married, you can choose single as your filing status. If you're single and supporting a dependent financially, then you can file as head of household. There are other requirements to be considered head of household, such as paying for more than half the cost of the household for the year. And who is able to file as head of household? Well, there are three main criteria. As I said before, but I want to quickly remind everybody so we are on the same page here. So you have to pay for more than half of the household expenses, 50% at least. You must be considered unmarried on the last day of the tax year because the IRS will check that. And you must have a qualifying child or dependent. Okay, and so this is really, really important. Now, this tax filing status includes single parents and divorced or legally separated parents with custody of the child. Further, you can also be an adult who provides support for a parent or other relative or friend under qualifying circumstances. And so what is actually required for maintaining a household? Well, the first requirements for filing as head of household is that you must have paid for more than 50%. That we already established that. This means what? It means that you must have paid more than half of the total household bills, including rent or mortgage, utility bills, insurance, property taxes, groceries, repairs, and other common household expenses. In the case of a parent, your parent doesn't need to live with you, but you must maintain at least half the cost of their living arrangements. And the thing is, if you receive financial assistance towards your household expenses from a parent or other individual, you can still qualify to file as head of household, as long as you are paying more than 50% of the bills with your own earnings, savings, or capital. So the thing is, the major criterion the IRS pays attention to is the 50%. Doesn't matter if somebody's giving you money, either somebody or the government or a state agency, doesn't really matter. As long as you maintain the majority when it comes to expenses for your household, then you can qualify as head of household. 50%, that's the minimum that you must fulfill. Let's talk about what does considered unmarried mean for head of household filing status. The thing is, the IRS also requires all taxpayers who file as head of household to be considered unmarried as of the last day of the tax year. The last day of the tax year. Very quintessential here. To be considered unmarried means you file a separate return, you paid more than half of the cost of keeping up your home for the tax year, your spouse did not live in the home during the last 6 months of the tax year, okay, the last 6 months. Your home was the main home for your child, stepchild, or foster child for at least 6 months of the tax year. You must be able to claim the child as a dependent unless the only reason you cannot claim the child is because the non-custodial parents can claim the child under certain rules, and those things must be, there must be a judge's decision to prove all that. Keep in mind that if you and your spouse lived in separate homes due to a temporary circumstance, such as military service, business trips, a stay in a medical treatment facility, or attendance at college, the IRS still considers you married for that tax year. It's not about, it's not about physical proximity. It's about legal proximity. So what is a qualifying child, by the way, you might ask? The eligibility of a qualifying child or dependent extends beyond just your own son or daughter. To be considered a qualifying child, the child must meet the criteria in each of the following categories. The child must be your biological or adopted child, stepchild, foster child, sibling, step-sibling, half-sibling, or a descendant. It can be a child, a grandchild, great-grandchild of one of these relatives. The child must have lived within your home for more than 6 months during the tax year. The child needs to be younger than you. At the end of the tax year, the child must be under 19 if he or she is not a student, or under 24 if he or she is a full-time college student. The child must not have paid more than half of his or her living expenses during the tax year. In some cases, you may be eligible to file as head of household even if you are not able to claim your child as a dependent. Let me give you an example. For divorced or separated parents, if the child lived in your home for more than half of the year, you may file as head of household even if the divorce or separation agreement gives the other parents the right to claim the child as a dependent. Let me explain quickly what a qualifying dependent is. By the way, I want to quickly remind everybody of today's topic. We're having a conversation about how to file taxes with dependents. So, if your dependent does not meet the criteria to be a qualifying child, you may still qualify to file as head of household. And the thing is, the IRS has actually established a few criteria whereby the agency will actually judge whether or not a dependent that you claim, somebody that you claim as a dependent, is indeed a qualifying dependent. The following relatives are considered qualifying dependents for the head of household filing status as long as you provided more than half of the cost of maintaining the home and they live with you. Okay, they have to live with you for more than half of the year. So your biological or adopted child, stepchild, foster child, sibling, step-sibling, half-sibling, or a descendant, your parents. Okay, and so basically, if you can actually have some of your relatives who are permanently and totally disabled, even if that relative does not meet the age requirements to be a qualifying child. In other words, when we have a physical disability or mental disability for that matter, age doesn't matter anymore. The IRS is looking at the person and say, okay, does this person actually, did you care for this person at least 50%? If yes, you qualify. Okay, your parents will qualify. Your step-parents, your niece, your nephew, a sibling of one of your parents, or your son-in-law, daughter-in-law, parent-in-law, mother-in-law, brother-in-law, or sister-in-law. And even if your parents did not live with you for more than half of the year, you may still qualify to file as head of household. If you paid more than 50% of the cost of maintaining a home as your parents' main home throughout the entire tax year, and you are eligible to claim them as a dependent, then you may be able to file as head of household. So this can also include a care facility where they lived during the year. So the whole thing is, as I said before, the main criterion here is at least half of the cost of maintaining a home or maintaining a welfare state, a state of well-being for your relative. And again, that relative can be a child or can be an elderly person. As long as you are responsible for that person during the year for at least 50%, you can actually claim the head of household status. Let's talk about how does the head of household status compare to other filing statuses, because a lot of folks are interested in the difference here. They want to have a clear idea of what's really happening. So head of household filing status has a more favorable standard deduction amount. I just said that. It also has a lower tax brackets than filing single, but not as favorable as married filing jointly. So let's do a compare and contrast between head of household versus single and head of household versus married filing jointly. So head of household filers can have a lower taxable income and greater potential refund than when using the single filing status. So the head of household status can claim a roughly 50% larger standard deduction than single filers. Heads of household can also use wider tax brackets that actually allow more of the taxable income to fall into lower tax brackets. That's for head of household versus single. What about head of household versus married filing jointly? Joint filers cannot file as heads of household but receive better standard deduction amounts as well as wider tax brackets. Joint filers have a standard deduction twice as large as single filers and roughly 33% larger than heads of household. Okay, So what are the tax brackets for the head of household filing status? Well, this is this changes all the time, so it's just a lot better to go to the IRS website and to actually see the one that applies for this year. And this changes all the time. Again, those are indexed for inflation and other things. Now, can two people file head of household on their return? Two people cannot file as head of household on the same return. Very important. If they are married, then they typically must either file as married filing jointly on the same return or married filing separately on separate returns. Two people can claim both head of household while living in the same home. However, both will need to meet the criteria necessary to be eligible for head of household status. In other words, they must be both unmarried. They must be both able to claim a dependent as a closely related person. That dependent must reside at the same residence for more than half of the year, or in the case of an elderly parent, they can live elsewhere, but you still must have provided them with at least half of their support. And they both must have paid more than half of the cost of keeping up the portion of the home for themselves and their dependents. Now let me talk about, can you claim your boyfriend or girlfriend as a dependent and head of household? It's a pretty interesting question. Now, even if your boyfriend or girlfriend meets the IRS definition of qualifying relative dependent, you still cannot use the head of household filing status because this person is not related to you in the required ways. See, when we talk about boyfriend, girlfriends, it doesn't meet the IRS criteria. You're not legally bound yet. Okay. So you can learn more about the rules of whether you can claim a boyfriend or girlfriend as a dependent on your income taxes on the IRS website. Okay. And can you claim head of household and not claim a dependent? Generally, you need to have a qualifying child or dependent claimed on your return as a dependent to file using the head of household status. However, if you are a custodial parent, you may be eligible to file using the head of household filing status if you cannot claim the child as a dependent, only because the non-custodial parents can claim the child when meeting these rules. You are unmarried or considered unmarried on the last day of the year. The child received over half of their support from their parents. The child is in the custody of one of both parents for more than half of the year. You sign a written declaration that you will not claim the child as a dependent for the year, and the non-custodial parents includes it with their tax return. Okay, and so the thing is that overall, one thing I want to say here is that head of household filing status is really great. It's a great status that allows you to pay less taxes. In other words, the IRS is rewarding you for actually taking care of your relative, which makes sense ethically, but also financially. Just make sure though that you keep receipts. As with everything about taxes, record keeping is really important. I mean, God forbid the IRS wants to dig a little further and they're asking you, they're challenging your deduction, they're challenging your expenses. You got to be able to back up whatever you say on your tax return. Otherwise, hello, all penalties, hello, all the fees. Okay. And one thing I also want to say here is that if you have, let's say you have more than one dependent, let's say you're taking care of 3 or 4 or 5 foster children at once, then it really is great to have to list your expenses in Excel, or just use one of those free personal finance apps that allow you basically to keep track of your expenses all year long. Thank you so much for your attention. I really appreciate it. In today's conversation, I was just talking to you about how to file taxes with dependents. So I spoke about, I defined the head of household filing status, the advantages. I spoke about what a qualifying child is, what a qualifying dependent is, and some of the benefits that come with the head of household filing status. Thank you so much for your attention. I really appreciate it. God bless you. I'll see you next time. But until then, remember, stay marvelous.